the reason I did what I did at MicroStrategy was, if I gave the $500 million back to the shareholders, that was $60 a share. The stock was $120 a share. I basically was valued at 1 times revenue plus the cash. When I gave the money back to the shareholders, the stock was going to go to $60 a share. When that happened, all my employees' stock options were going to be underwater, right? And we were going to get beat to death by Amazon, Apple, Facebook, and Google. They were just going to steal all our employees when the stock crashed. And that would mean that instead of growing 5 or 10% a year, I was going to be shrinking 5 or 10% a year. Instead of my cash flows doubling or tripling, they were going to be cut to zero. And once your revenues start falling, your cash flows go to zero, you have no capital, all your employees quit. When your employees quit, the company unwinds, we're going to go to zero. So giving the cash back to the shareholders was a fast death. Holding the cash at 0% interest when it was losing 20% of its value a year was a slow death. Doing something was the alternative. And so we decided to do something, which is invest the money in a property or in an asset that would go up faster than the rate at which the money was collapsing. And that set us on a search, and we considered buying a portfolio of scarce art. I thought about $500 million worth of real estate.
Really? You thought about buying art?
Yeah, I thought everything. Do you buy gold? Do you buy art? Do you buy real estate? Do you buy a portfolio of stocks? Do you
So
buy
you're going through an
some
array of
crypto
different
asset?
options before you settled on Bitcoin. You were thinking art, you're thinking real estate, you're thinking anything other than cash.
Everything. And in fact, we put out a press release to our entire shareholder base when the stock's 120, and you can go read it today. It said, over the next 12 months, we're going to buy back $250 million worth of our stock, and we're going to invest $250 million worth of our treasury assets in some asset in order to avoid inflation. And we listed a litany of these things, and we included Bitcoin as one of the things we're evaluating. Ultimately, so we went from first principles. We said, you have a bunch of money, and I'll tell you why we said we're going to buy back $250 million of our stock in a second. But you have a bunch of money, say $250 million. You want to hold it for 100 years, give it to your great-grandchildren. Where do you invest it? Well, if you put it into the dollar is losing, at least, it's been losing 7 to 10% of its value a year for 100 years. That means over the course of 100 years, the dollar loses 99% of its value. My house in Miami Beach was purchased for $100,000 in 1930. Okay, I bought it for $14 million.
This is the villa.
In 2012. Today, you know, yeah. So 100,000 to 50 million in less than 100 years. That's not the house getting more valuable. That's the currency getting less valuable.
So that means the 200 million 100 years from now is
nothing.
$2 million.
Okay, if you took any amount of money, take $100 million in the year 1900 and invested in any currency in the world, you would have lost 100% of your money in every currency except for the dollar or maybe the pound. Every currency collapsed. The winner of every war in the 20th century was the United States. And so the winning currency loses 99.5% of its value. Everybody else, you lose everything. Now, if you put that money in gold, there's a 95% chance it would have been seized in the 100 years because there's only a couple of cities on Earth, maybe Zurich or Geneva, where you wouldn't have had it stolen, and maybe then they still would have stole it, you know, if you were the wrong citizen in the wrong country. If you were a Swiss citizen in Switzerland for the 100 years, you might have kept the gold. But, you know, Churchill seized the gold. Roosevelt seized the gold. If you'd lived in Germany, you would have had your gold seized multiple times. In Japan, they lost it 2 or 3 times. In Russia, you know, count the number of times. So there's nowhere on Earth where you could have kept your gold. And now you're stuck with, okay, well, where do you invest it? Land? Take $100 million worth of money and buy land in Florida. Tax bill's $2 million a year. If you buy property in Florida, it's 2% property tax a year. It gets assessed up every year. You have the ownership of the land for about 20 years before the government takes it back from you. You don't own your
plus the
your
maintenance
property.
of the land. Right?
Yeah, plus the maintenance. So if you want to move money through time, how do you do it? You can't do it with the currency. The money is broken. The money was always broken. It's been broken for 100 years, losing 7 to 10% of its value. But in hyperinflating economies like Venezuela or Argentina, fill in the blank, the money loses 20, 30, 40% of its value a year, sometimes 80% of its value a year. In that case, you can't even carry money for a decade. You might not be able to hold money for a year in those economies. The Russian ruble has lost 35% of its value in the past few weeks, right? That's how fast it collapses. So fundamentally, we have this issue. I want to move money through time. I have a 100-year time frame. I'm an institution. The whole point is an institution is supposed to go on, right? And so how do you do it? No currency will work. Can you use gold? Well, gold as money is the best idea humanity had for like 5,000 years, but it's not a perfected idea. The problem with gold is gold miners produce 2% more gold a year. Okay, that's no better than the state of Florida seizing 2% of your property a year in a property tax. The half-life of gold, therefore, becomes about 30 years. You divide 2% into 70. In 35 years, your money's cut in half. Hold it for 100 years, it's cut in half 3 times. The second problem is it'll be stolen by a criminal or a politician that disagrees with you. And the third problem with it is that gold is a property you have to put in a vault. And if you have to put in a vault, then the counterparty, the bank, is able to hypothecate it and rehypothecate it, which means they basically sell 100 ounces of gold paper for every ounce of gold you hold, and they keep shorting it naked, and they hold the price down and manipulate the price. You can't hold your own gold. So ultimately, the problem with gold is holding money in gold over the course of 100 years is going to lose 85 to 90% of your wealth under the best of case. The other problem is you can't move money through space with gold. I need to move money through time and space. I need to hold it for 100 years, and I need to move it from here to Tokyo. If I want to move, $1 billion of gold is like 30,000 pounds or something. You want to move a bunch of money through space, it's going to cost you 3 to 6 months and $5 million to move it once. If you want to move it through time, you're going to lose 80, 90% of your money through time, and it's going to be seized. So gold's a pretty expensive way to move money. Currency is an ineffective way to move money. Property is only good so long as the nation state that the property is in chooses to allow you to continue to possess it. But of course, the oldest story in the world is, we lost the family farm because we couldn't pay the property taxes. You can hold the land. Buy 10,000 acres of land, someone moves in and sets up shop next to you, they incorporate a city, then they bring 50 people in the city, then they make themselves mayor, then they pass a property tax, then they annex your farm, then they give away free money to anybody that wants free housing in the city, then they double your property tax, so you can't pay your property tax, then they seize the property because you can't pay the property tax. So ultimately, property is not a very effective way to hold money for long periods of time, and you can't move money through space. So this is a problem.
So if you enjoyed this little short segment from the podcast that we did, here's another short segment to watch. Or if you want to see the entire podcast, click over here. Take care, everybody. Bye-bye.